Warren Buffett, A Life of Wisdom, Simplicity, and Enduring Success. Part 1, Childhood and Early Influences. Warren Buffett, often referred to as the Oracle of Omaha, was born on August 30, 1930, in Omaha, Nebraska, USA. His early life was marked by an unusual affinity for numbers and business, even at a young age. His father, Howard Buffett, a well-respected stockbroker and U.S. congressman, was a key influence on Warren's early interest in finance. His mother, Layla, was a homemaker with a strong moral grounding that played an important role in shaping Warren's ethical compass. Buffett's fascination with business began when he was just a child. At the age of 6, he purchased his first stock, Citi Service Preferred, at $38 a share. This early experience taught him about the volatility of the stock market. Warren later recalled that the stock dropped to $27 a share, only to rise back to $40, leading him to sell at a small profit. This experience, though it was a small financial loss, had a lasting impact on him and helped develop his long-term investment perspective. As a child, Buffett was also known for his entrepreneurial spirit. He sold gum, Coca-Cola, and even newspapers to make extra money. By the time he was 11 years old, he had already developed a keen sense of the value of money and the principles of investing, which would lay the foundation for his future success. Part 2, First Steps into the World of Investment. Buffett's formal education in finance began at the University of Nebraska, where he earned a degree in business. He later attended Columbia Business School, where he studied under the guidance of Benjamin Graham, a legendary investor and economist. Graham's teachings on value investing and the importance of sound financial analysis profoundly influenced Buffett's investment philosophy. In 1951, Buffett worked for Graham's investment firm, Graham-Newman Corporation. It was during this period that Buffett refined his investment principles and learned the art of analyzing financial statements, valuing companies, and making sound investment decisions. After Graham's retirement in 1956, Buffett returned to Omaha and started his own investment partnership, which later evolved into Berkshire Hathaway. Part 3, The Birth of Berkshire Hathaway. Berkshire Hathaway was originally a textile manufacturing company. In 1962, Buffett began buying shares of the company, eventually taking control of it. Recognizing that the company's textile operations were struggling, Buffett made a bold decision to shift the focus of Berkshire Hathaway toward acquiring and managing a diverse range of companies. Over the years, Buffett's investments in companies such as See's Candies, Geico, and the Washington Post demonstrated his ability to identify undervalued businesses with strong management teams and growth potential. His keen ability to evaluate companies not based solely on their financials but on their intrinsic value and long-term prospects was key to Berkshire Hathaway's rise. Berkshire Hathaway's transformation from a textile manufacturer into a conglomerate with a market value in the hundreds of billions of dollars is a testament to Buffett's brilliance as an investor and business leader. Part 4, Long-Term Vision and Key Investments. One of the hallmarks of Warren Buffett's investment philosophy is his commitment to long-term investing. While many investors chase short-term gains, Buffett believes in buying companies with solid fundamentals and holding on to them for the long haul. His approach is rooted in a belief that the best way to create wealth is through patience, discipline, and focusing on the underlying value of a business. Some of his most notable investments have included large stakes in companies like Coca-Cola, American Express, and Apple. Buffett's investment in Coca-Cola in the late 1980s remains one of his most famous, as the company's share price skyrocketed over the decades. He is also known for his partnership with Charlie Munger, who became his longtime friend and business partner, helping shape Berkshire Hathaway's philosophy. Buffett's ability to identify undervalued stocks, understand businesses with competitive advantages, and recognize strong management teams has set him apart as one of the most successful investors of all time. Part 5, Investment Philosophy and Personal Reflections. Warren Buffett's investment philosophy is centered around a few key principles: understanding what you are investing in, focusing on long-term value, and only investing in companies with strong, capable management teams. Buffett has often emphasized the importance of buying businesses that you can understand, something he calls staying within your circle of competence. His approach also revolves around being patient and disciplined. While other investors may react to short-term market fluctuations, Buffett takes a more measured approach, believing that good companies will eventually realize their true value over time. Additionally, Buffett has always emphasized the importance of ethical behavior in investing. He believes that personal integrity and transparency are the cornerstones of long-term success in both business and life. His ethical views have made him a trusted figure in the business world. Buffett's personal life also reflects his values. Despite being one of the richest men in the world, he leads a simple lifestyle. He still resides in the same house he bought in Omaha for $31,500 in 1958. His humble, no-frills approach to life is a reflection of his belief that true happiness does not come from material possessions. Part 6: Relationship with Media, Ethics, and Cultural Impact. Despite his immense wealth, Warren Buffett has always been a media figure who avoids seeking attention. He is known for his low-key, humble demeanor and his ability to speak plainly and clearly. In interviews, he often uses humor and simplicity to explain complex financial concepts. His annual letters to Berkshire Hathaway shareholders are widely regarded as masterpieces of business writing, offering insights not only into the company's performance but into Buffett's thoughts on investing and life. Buffett has also been a vocal proponent of philanthropy. In 2006, he made the groundbreaking decision to donate the majority of his fortune to the Bill and Melinda Gates Foundation. This act of generosity has inspired many other billionaires to commit to giving away a significant portion of their wealth. Buffett and Gates also created the Giving Pledge, encouraging the world's wealthiest individuals to give away the majority of their money to philanthropic causes. Part 7: Legacy and Lessons for Future Generations. Warren Buffett's legacy extends far beyond his financial success. He has shown the world that wealth can be built on a foundation of patience, discipline, and integrity. He has taught generations of investors the importance of investing in what you understand, thinking long-term, and focusing on value over hype. His commitment to philanthropy and ethical business practices has set a standard for future generations of business leaders. Warren Buffett's story is a reminder that true wealth is not just measured in dollars, but in the positive impact you have on the world and the people around you. As Buffett often says, the best investment you can make is in yourself. His life is a testament to this belief, as he continually seeks to learn, grow, and improve. His legacy will undoubtedly continue to inspire and shape the world of investing for many years to come.